Hey everybody, welcome. It is Tuesday. I think today is the 16th, and we are live now with our Minds of Markets live stream, our midday market update. We're going to talk about all things that are happening in the markets right now, and yes, there is a lot happening in the markets right now. Normally I do this live from the background that you see here, the floor of the SIBO and the S&P 500 option pit, but I am actually on vacation right now, but still doing this. So yes, that what you see in the background, that is the background of the S&P 500 pit. I am just not there right now, but that is okay. All right, what is on the agenda today, everybody? And again, first off, welcome everybody. Really appreciate you being here. And if you have any questions whatsoever, any questions, please put them in here in the chat, and I will be happy to answer anything. If you want to look at a stock, look at anything, just let me know. All right, so first off, let's go to live markets here. Okay, look at this. Look at this. This is the Dow. You know, last Friday, it's really interesting. Last Friday had that huge rally, sell off at the end of the day, and the Dow closed right just above 40,000. And there was so much chatter out there on social media and pundits and Monday morning quarterbacks saying, oh, the fix was in. Had to get the Dow closing right above 40,000. Well, look where we are now, guys. The Dow well over 40,000, well over, where are we right now live? We are at 41,104. So what does that mean? Why have over the last 3-4 days really seen this massive outperformance? Why have we seen that? Well, there is something going on right now called a sector rotation, or at least in the short run. And that's the easy answer. What does that mean? How many people out here know what sector rotation means? Okay, give me a shout out in the chat here. Okay. Yeah, what it means is there's money going out of one sector and possibly flowing into others. And what we have seen is the NASDAQ a little bit weaker over the last week, especially the last 3-4 days or so, and money flowing into the IWM and Russell, which are the small cap stocks, and flowing into Dow stocks. If you look at where the markets had been year to date as of last week, S&Ps were up 18%, NASDAQ up more than that, and the Dow was up a paltry, couple of percent. So there's a lot of room to make up for that. So that's what we're seeing in the Dow stocks right now. And one way to trade the Dow, okay, obviously you can just buy stocks in it or look at the Dow, but one way to really trade it from the option perspective is with this right here, this ETF called Diamonds, the DIA. It's a spider ETF. The options are incredibly liquid. Great vehicle to be able to trade. And if we look, one thing we always want to look at when we're trading options is what? Implied volatility. How expensive, how cheap is option volatility? And even with this run up here, vol is pretty cheap. It's certainly not at the bottom of the barrel, as you can see right here, but it is still pretty darn cheap. So what does that mean? Well, it means you can use DIA as a really good proxy to put on a position, hedge a position, whether it's a bullish or bearish position right now. Okay, you can really use that without overpaying, without looking at that premium and saying, oh man, what if vol goes down? So that is a great proxy, a great way to trade the Dow. Okay, what else is happening here? Okay, there was so much talk about the S&Ps, right? Let me pull up an SPX chart. Again, this is usually what trades right behind me, okay, in the S&P 500 options pit, but there was so much talk about S&P 5500, 5600. I know my chart is loading right now. We're now at 5650. So there's big question out there. Can this rally keep going? Can this rally keep going? Are we due for a big pullback? Well, we all know, right? We all know rallies just can't go on forever, okay? But that doesn't mean that we can't go higher, kind of consolidate, pull back a little bit, maybe go higher yet. Are the fundamentals in place for the market to go higher? I think that's the biggest thing. Did we get ahead of ourselves, especially up until the last couple of weeks with the AI trade catapulting the NASDAQ and even the S&Ps? Can we go higher? Absolutely. Right now, the path of least resistance is higher. But what you have to remember, folks, is it's not going to go higher forever, at least on a day-to-day basis. The market, over time, will move higher. Okay, we've seen that. Even through Great Depression, even through the dot-com bubble, even through the financial crisis. Yeah, there's going to be hiccups, there's going to be sell-offs, but over time, the market will move higher. Now, as traders, our time frame can be really short, right? We're not, we don't have in our mindset what's happening 6 months from now, a year from now, 5 years, 10 years from now. Okay, that's why the title of this podcast, Minds of Markets, because I am a market maker. The guys behind me here, we're market makers. So our timeline is much shorter. When I look at something, I look at literally days, maybe weeks. If I wanted to make an investment, if I wanted to do something longer term, boy, that honestly, that's out of my league. I leave it for my financial advisor. I've totally messed things up for myself in the past, trying to be both a financial advisor and a trader. So I've got the trader mindset. So can we go higher? Well, what are things that we've got to, talk about right now? Obviously, one, earnings. We are smack dab now. Smack dab in the heart of earnings. Started last week, end of last week with the bank stocks, and they are just, earnings are picking up, accelerating. The next 2-3 weeks, super busy. Number two, what else do we have on our platter? Oh yeah, we've got the political, which we're not going to get into politics here, but we do need to mention it. We've got the political landscape going on here. Okay, so that certainly is going to add some volatility to the marketplace. What else do we have here? There certainly still is no lack of geopolitical risk. Okay, in my, 35 years of doing this professionally, I'm not sure, outside of maybe going into 2000 and the dot-com bubble and the turn of the century, when everybody was freaked out, oh my God, is everyone's power going to go out? Are we going to lose the internet? Remember, people were thinking clocks were going to turn back to zero. Computers that had dates on them, they were going to turn back to 1900, right? So there was a big perceived risk that never really played out to the marketplace. But I can't really remember in my 35 years of professionally doing this, trading on the floor and teaching, where we have had heightened risk coming at us like it is now. And oh yeah, what else did I forget here? What else did I forget? How about the Fed and interest rates? And I left that one for last because right here, for the trader's mindset, this one may be the most important about what happens over the next month, maybe couple of months. That one may be the most important because the market certainly is expecting now a rate cut in September. Not so much in July, in a couple weeks when the Fed meets. In fact, the probabilities, which I'm going to show you here, are almost next to nothing about a potential rate cut. Let me bring this in right here, which I have done pretty much every live stream over the last few weeks. Okay, this is live. This is called the CME FedWatch tool. Okay, I'm actually going to put this in the chat right now, so anybody that wants to see what is what in real time, what the Fed is looking at, what the markets are pricing in about interest rates, this is the best thing out there. Okay, CME FedWatch tool. So this shows the expectations for the July meeting, which literally is 2 weeks away. And what this says right here is there is a 93% probability of rates staying the same. Only a nearly 7% of a potential rate cut. I actually think that possibility is much higher. Okay? I personally think they should cut now. When I say now, I don't mean today, but I mean at this meeting. The reason I say that is because the data that the Fed looks at, the data that they are so dependent on, is in the rearview mirror. Okay? It is not forward looking. Kim, you're very welcome. You're very welcome. It is not forward looking. And what's the data that we have seen over the last several months? A weakening economy. Okay? Inflation coming down. Okay? The Fed, mainstream, the media, they've all been asking for this. And anybody that sees me interviewed on one of the networks, I talk about this regularly. Okay? Be careful what you wish for. Because yes, the Fed needs to see the employment situation calming down. They need to see inflation coming back down, which it is. But what does that all mean? That actually means the economy is getting weaker. Okay? So I think we have to kind of look for that balance and really be careful what we wish for. And the data that's come out over the last several months, even up until last week, where CPI was much lower than expected, PPI was a little bit higher, but the jobs number was way lower. We got retail sales this morning, which were weaker, which shows the consumer is struggling, starting to struggle. I think they should cut now. They won't do it. They won't do it in July. So let's pop over then 6 weeks further up, which is the next Fed meeting in September. Okay, that meeting is on the 18th of September. So almost exactly 2 months from right now. Now the curve has shifted. This was the unchanged territory here that we saw in July. Now you can see there is over a 91% probability that the market is pricing in that the Fed's going to cut rates by 0.25% in September. There's a small probability priced in right now, almost 7%, that they may cut rates by 50 basis points. Okay? Again, I think they need to do it sooner rather than later. So the market, the reason I'm bringing this up right now is because if we kind of refer back to those 4 points that I put on the screen just a while ago about, things that could potentially impact the market in a big way here, the Fed and interest rates is the big one right now. The market is trading with the thought process that the Fed is lowering rates sooner rather than later. We'll see what happens because, again, this is not political, guys. I am only bringing the news when there's politics involved. This is not a political discussion. This is not favoring one side or the other. This is not an opinion, okay? You can read this all for yourselves out there, but when we look at a September cut, there's a lot of talk out there, but boy, wouldn't that be political if the Fed just happened to cut rates right before the election. So there's that risk also, guys. What I would say to that is, and again, this is not political whatsoever, what I would say to that is the prospect for a September cut has been there for a long time, and the data now is just proving it more so and more so. So, enough with the interest rate thing, but that's something that we clearly have to be aware of, because the market is trading, and I don't know what that premium is. The market is trading as if the Fed is going to cut rates in September. Okay, any questions? I'd love for you to throw questions out at me regarding that topic before I move on, because there's a lot I want to cover today. Okay, currently right now, let me look at the markets here. S&Ps are up about 13. The Dow is up almost 600 points, and the NASDAQ is the laggard. The NASDAQ's down about 50 points. Not a big deal, but how much did we see the opposite of that over the last several months, where we saw the NASDAQ going up and the Dow really lagging or trailing? Okay, no questions on that. Let's move on, because there is a correlation out there that I want to bring up to you. Who has seen what Bitcoin has done over the last 4 days, 5 days? Who has seen that? Okay, let me bring up this chart right here, folks. Okay, Bitcoin is the red. Bitcoin is the red. Okay, what do you think this blue is? What do you think that blue line is? And that is a correlation. Okay, it is a stock out there. Okay, it's a stock. What stock do you think that might be? And the reason I bring this up is, you talk about a direct correlation of a commodity, or whatever you want to call it, an asset class, whatever you want to call Bitcoin, to a stock, to an equity. Yes. This is Coinbase, guys. Look at this correlation. So I get the question all the time from people afraid to trade in crypto. They want to get involved, but they want to, but they're afraid to trade crypto. Well, looking at this, you can trade Coinbase or Coinbase options as a proxy to Bitcoin. Okay? And what's unbelievable about that, even though the Bitcoin market itself, the futures market, is incredibly liquid, there really is not a great Bitcoin option market for liquidity right now. There are Bitcoin option markets out there. The liquidity is not great. Coinbase, the liquidity is phenomenal. It is phenomenal. In fact, let me bring some of that up to you right now. Before we do that, I want to show you something here. Okay, excuse me. Look at this area of resistance. Now, we're far away from that, okay? Because right now, Bitcoin's hovering around 65. Massive move up over the last week, which I'll explain why in a moment, okay? Massive move up. However, from a technical standpoint, if I was looking for a place to just short Bitcoin or short Coinbase, besides just the fact that it's rallied over 20%, Bitcoin has in the last week, this would be the area, pretty much right in here. That correlates to Bitcoin being around just over 70,000, 71,000. Okay, and Coinbase being where? What's that correlation we see right there? 254-ish or so. Well, Coinbase is not that far away, guys. Coinbase is not that far away from resistance. Actually made a nice recovery today after the big move it made yesterday. Okay, here you can see this area of resistance right here in Coinbase. If it blew through that, which, listen, certainly could, next area up there. Everybody see that? Okay, Now, the reason why Bitcoin has catapulted over the last week or so, twofold. Number one, don't know if you all were aware of this, but back in 2014, 10 years ago, there was a platform, crypto platform called Mt. Gox, G-O-X. Long story short, it got hacked, and there was, I believe the number is $14 billion worth of Bitcoin that was hacked. Okay? 10 years later, fast forward to where we are right now, and the people that got hacked are actually getting their Bitcoin back. It took 10 years. Okay? Well, what would you do if you had lost something 10 years ago that was worth $600 and it's now worth $55, $60, $65,000? What would you do? You'd be selling, right? And if you didn't even have it, but you were an owner of Bitcoin now, or if you wanted to speculate in the market a little bit, knowing that this amount of Bitcoin was coming to the market, what would you want to do? You'd probably want to sell ahead of all these people getting their Bitcoin back, because these people are going to sell it. So that's why we saw that volatility to the downside in Bitcoin over the last 3 weeks or so, in the anticipation of that Mt. Gox release. Okay, now, in addition to that, Germany, country of Germany, they had a big portion of that. And I don't know what the exact number was, but they were unloading Bitcoin over the last several weeks at a record pace that just kept massive pressure on Bitcoin. Okay, so that's one reason. Number two is imminently, today, tomorrow, maybe Friday, okay, it is, Robert, you're killing me with that. Should I bring up Amazon Prime right now and we'll talk about rangefinders? That's awesome. ETH, Ether ETFs, okay? There's word that they're going to be passed any day now, which, we saw that with Bitcoin also. With Bitcoin ETFs, just a massive pump, a massive run up. So that could definitely be part of what's going on with this huge rally in Bitcoin. Here, Robert, does that make you happy? I'm not advocating for which one to buy, but it's on my list here. Prime Day, looking for a rangefinder. There we go. If anybody wants to get me a gift, that's what I'm looking for. All right. Anyway, back to the markets here. With all of this uncertainty coming up, where do people go to? Okay, in times of pressure, in times of uncertainty, where do people go to? How about gold? Let's bring up a chart of gold, which I believe, if I'm not mistaken, hit an all-time high today. Let me get a good chart here. I had one up. I don't know what happened to it just now. See, isn't this good that this is live? All right, commodities, gold. So we have seen gold just absolutely flying. People want protection. Okay, now when interest rates are skyrocketing, interest rates are going higher, not so much, right? Because here's gold, by the way. This is a 1 year chart right here. So we are at all-time highs. But when interest rates are moving higher, people would rather buy or own other investments. When you can get your T-bills, your government securities, your fixed income at 5%, boy, the opportunity cost there to own gold, not so great. When interest rates are really low or lowering, that's a catapult. That's a very big tailwind for the price of gold. So what does this also suggest here? It suggests two things. It suggests that, yeah, there's a lot of global uncertainty, but B, the projection is rates are coming down. Rates are coming down. Over the last 9 months or so, central banks around the world, and I'm talking about not just, US, all throughout Europe, all throughout Asia, have been buying up gold at record paces. They've been buying gold at record paces. Okay, now, there we go. Thank you, Joe. In terms of if you want to trade gold, right? A lot of people, you don't have a futures account. It might be hard. Margins aren't great. So just as we were talking about being able to trade the Dow through an ETF, as Robert just mentioned here, GLD, which we've certainly had positions in. GLD is one of the most liquid ETFs that's out there, and GLD tracks the price of gold. It's almost looking at, just for very 30,000 foot view understanding, it's almost like tracking SPY to SPX, GLD to gold. It's not a 1-to-1, or in this case a 10-to-1, but it does track it very, very closely. So again, if you wanted to take a position, long or short, not having to, trade gold futures, look at GLD. Here's implied volatility in GLD options. Getting pretty expensive, actually. Getting really, really expensive for GLD. We could look at this and say, man, it's trading 15, 16% implied volatility. That's not expensive. When we see other stocks trading 80, 90, 100% implied vol. But just remember, you can't really look at implied vol of one asset class versus something else. You have to look at it to itself. Okay? GLD is a great one. Someone mentioned GDX. That is the gold miners ETF. A little bit different. Also very, very liquid. Very, very liquid. Doesn't move quite as much, does pretty much move lockstep with the price of gold, but these are the gold miners, if someone is interested in that. All right, so while we're on the subject of gold, got to bring this up to everybody because this is, in my opinion, super, super important. Hang on, let me go to there. There we go. If you look in the bottom right-hand corner of your screen right now, you're going to see that we actually have a webinar tonight on gold. We have a gold business here called Sasco Gold. It's Prosper Trading Academy business. Okay? And if you are interested at all in learning more about owning physical gold, why you should, why you shouldn't, what the benefits, what the drawbacks are, honestly, I urge you to join in tonight. It's not going to be a big sales pitch. It's not going to be, a 3-hour webinar. It is a live webinar about gold. Okay? Robert, you are on fire today. I love that. You are on fire. We got to go out for drinks one day, my man. That is just awesome. All right. Michael or someone, if you could put the link to the webinar tonight in the chat box, that would be just awesome. There we go. Thank you. I highly recommend everybody, join in. Just learn more about it. Whether you're really in the market for gold or not, you will learn a ton about gold, hedging, and the like. All right, guys. Again, what you see behind me here, normally it's live and you can hear all the activity on the floor. I am not live on the floor today. I am live with you. Appreciate everybody being here for our Minds of Markets live cast. And as we put up there, anyone have any final questions? Kim, thank you very much. Love Sasco. Drew, yes, Drew is very knowledgeable. He's a real person. He is a real person. He is very, very knowledgeable. All right, guys. Well, I really appreciate you all being here again today. We'll see you on Thursday. Have a great rest of the trading day, everybody. See ya.